So go ahead, please make sure you read the disclaimer. And this is going to be the kind of first part of Wayne's pivots. This is going to be entry, exits, and stop loss rules for the three primary biases of Wayne's pivots. If you don't know who I am, I'm Joe Boss. Phone call. How to hang up. We are doing this live, so I'll be able to see all of your questions here on the screen. And if you have any questions as we go over the entry, exits, and stop loss rules for these three primary biases, go ahead, ask it in the chat. So let's get right on into this. First off, we have the bullish bias set up. Typically here, you're going to have your entries at M2, your stop loss at M1, and your exit at M4. Now, if you're not familiar with what the M levels are, these are simply midpoints. If you go ahead and look at this for me real quick, you'll see that we have the central pivot and we have S1. Well, typically in traditional pivot points, pretty much every other pivot point calculation, you just have central pivot S1, R1, R2, S2. You have those levels. Well, in Wayne's pivots, what you have are these M labeled levels, and you can actually change what the M is. You know, you can have M plus, M minus, M whatever, but these are the default labels that most people who trade these pivots use. These M levels identify midpoint pivots. Essentially, it's the midpoint between the central pivot and S1, and that gives you M2. And the reason why we call it M2 is because the midpoint all the way down at S1, or no, between S3 and S2, we actually call that M0. And then between R3 and R2, we call that M5. So it goes from 0 to 5, and we don't really use M's and R's past those S and R3 levels. Let me go ahead and hide my face here so you can get the full picture. There we go. All right. So now let's go on to the next step here. Now that we've kind of defined these midpoint pivots a little bit. So your entry for a bullish bias is the midpoint between the central pivot and S1, which we call M2. And we use traditionally you're going to be using your stop loss here at S1. However, there are a few different ways you can measure stop losses. You can use an ATR, you can use support and resistance, but as a standard entry, right, just to have rules, one of the things you could look for is, okay, where's S1? Because a lot of these pivots, their distance is based by volatility. So they already have the volatility of the prior day's calculations baked into them. So this is actually a pretty good measurement to use for stop losses. Unless you have some other preferred flavor, you could go ahead and use those. And once you take your entry at M2 and you have a bullish bias, your exit's going to be M4. Now, you could go ahead and look at this and be like, well, Joe, exactly what is it exactly I'm taking when I'm saying I'm going to be doing let me transition back here, a bullish bias? Well, that's the important thing with these pivots. I can explain trading rules to you, but you need to know your bias in the first place. You can do that through fundamental analysis, technical analysis, quantitative or sentiment analysis. There are a lot of ways to pick a direction to which you're going to trade. But ultimately, once you've picked a direction, whether you're bullish or bearish on a trade, then you could go ahead and trade these because you've biased the pivots now. And if you're still curious about like what is even all this stuff, go to TradingView and just type in Wayne's pivots into TradingView, and you can get the free version of the Wayne's pivots indicator on your chart like that. You know, no hassle, no setup, anything. Just type in Wayne's pivots on TradingView, apply it to your chart, and you're done. And if you're brand new to this, you can kind of follow along. All right. Let's go ahead and transition back here. So primarily what you need when you trade a bullish bias, you know, this would be your entry and your exits. You need to have a bias already determined somehow, some way, through moving averages, through fundamentals, through quantitative or sentiment analysis. That tells you, hey, I should be a bull, so here's where my entries and exits are going to be as a bull. Now, this is your first variation of a bullish bias, going from M2 to M4 with the stop loss at S1. Your next variation is going to be a little more aggressive. It's going to be from the central pivot as your entry and M2 as your stop. Now, a valid entry for a bullish bias is anywhere in that green zone. However, your best entry as a bull is technically going to be at S2, while your most aggressive entry is going to be at the central pivot. And then you're going to get a slightly higher target if you enter at the central pivot. Because if you were to enter at M2, your target's M4. And now we've just kind of stepped our pivots up by one step. So instead of targeting M4 when we enter at the central pivot, we have a slightly more, as our entry is slightly more aggressive, our exit is going to be slightly more aggressive. Then here we have the bearish bias. You can already see here that when we have a fundamental, technical, quantitative sentiment bias that is bearish, once we've already predetermined that the market is going to move downwards, we'll go ahead and slap these on our chart. And when price comes here, we're going to be shorting this M3 level, which is the midpoint between R1, the first resistance, and the central pivot. And in the free version of this indicator that's on TradingView, the colors are going to be a little different. The pro version has everything set up, and you know it only costs $20. It's pretty, even though I've built it, and there might be a conflict of interest there, but I'll tell you, I've built the thing to trade this strategy, and the people who trade this strategy on TradingView who use this indicator are very happy with it. Anywho, that's just a technical detail about the colors, and also hiding different pivots and whatnot. Anywho, when you're a bear, your most conservative basic entry is going to be here at M3 with your stop loss at R1. And as you start to move down, once you actually get a bearish move in your price, if you are correct on your bias, you're going to hit M1 as your first exit. And then going back real quick here, it's the exact same thing. Exact same thing if you were to be a bear. Oop, if I could go back here and grab the pen. If you were to go back here and do something like that, it's the exact same rules, except in reverse. So the bullish bias and the bearish bias are mirror trades. They are mirror setups. Alrighty then. So are there any questions so far on the bullish or bearish biases? Because otherwise I'll move directly into talking about the range. And this is something I have yet to seen talked about in as great a detail as I'm about to go into. So, let's get into this. If you have let's say you expect price to go into a range, right? Let's say you're market neutral on an asset. Well, typically, how pivot point traders define very, very generally a range is between R1 and S1. These have been rules for pretty much everyone's pivots, from everyone who's a professional pivot points trader. Your ranges are between R1 and S1. However, with Wayne's pivots, we can be a little more granular, because with this we can say, okay, between M3 and R1, we can look at that as the top of the range, and M2, S1, we can view that as the bottom of a range. So now we can get a little more granular in our entries, and things start to get a little more interesting here. So let's say we go ahead and we have this price action leading into the range, right? Let's say we're neutral on the asset. Okay, we're opening at M3. Okay. Well, the first thing we're going to do is we're going to enter short here. This would be a short entry. If you're entering in a range between this area, you're going to be going short. And notice how this sets up a lot like the bearish bias trade. So you go ahead and you get your exit anywhere in that red zone. If you shorted at R1, your target's S1. If you shorted M3, your target's S3, S1. It's kind of a range. Well, kind of a range within the ranges, right? You kind of have zones to enter and zones to exit. That's what these green and red areas tell you, is between these two pivots you can take your trades. However, the most optimal locations will be like, okay, M3, S1, M3, S2. Now, what's interesting about a range is that you can sometimes get two trades in a range. You can get your bearish trade like we just got here, or we can flip it around, right? Where you go ahead and you get your bullish entry, right? Instead of, let's say we go ahead and we come from the bottom. Let's say you're a little neutral bullish, right? Well, you could see, okay, we're at M3. I'm not going to go long, but it's in a range. You could go ahead and just take your long right there. Doesn't that make sense? Bulls enter where the bears exit. And then look at where your stop loss is. It's going to be right there at the M1. You got your volatility baked into the measurement, so you know that if it continues to fall past M1, you're probably going to start hitting S2 and maybe close a little past S2. Like, it can be a little nuts. There is something you got to be concerned about when trading ranges, though, is that, what did I just say? The bias for a bearish trade would be M3 and then taking that down all the way to M1. So you need to have a bit of certainty when it comes down to going long, right here, and then taking that from S1 all the way to R1 for another range trade, right? So with that in mind, it's critically important, pretty much the one absolute hard and iron rule that you have to have before you trade a biased pivot, before you bias your pivots in any way, bullish, bearish, or in a range. And I'll go ahead and slap myself back on here. Let's go ahead and get the camera. Alrighty. Hello there. Alright. Enough playing around here. Probably not enough playing around. But how are you guys enjoying this so far? Because I'm about to get into biases. So typically, what you're going to be looking for here is before you create a biased pivot trade, before you decide, okay, I'm going to be a bull, I'm going to be a bear, I'm going to be neutral, you're going to be doing some research. You're going to be looking at news. You're going to be reading bank outlooks. You're going to be reading central bank reports. Well, a lot of that can be considered fundamental analysis. Then you have technical analysis where you're incorporating other things like moving averages, right? If you have a 200 moving average and it's below a 100 moving average, you're probably going to think that the long-term trend, intermediate trend, is still intact. So you may not want to change, long to intermediate term what your bias is, but maybe short term, you go ahead and use, let's say for the week you're a bull, but maybe overall for the month you're a bear, right? You could actually overlay multiple pivot points and take things into consideration that way. And that'll be something I go into detail a lot further on in the next few videos, in the next few live streams if I do get to producing those. Because these things, they do take a while to make. It's been a lot of research compiling a lot of these rules. Then you have quantitative analysis. I've actually developed a specific indicator to help with this, to help introduce more people into quantitative analysis and specifically applying it to the pivot points. It's an indicator called pivot probabilities, and you can find it on TradingView. And what it does is that actually tells you what the historical probability is that price ultimately closes between any two pivots. So it's like, or it can give you a binary decision. Okay, for the month of June, we close 60% above the central pivot, and 40% of the time we close below the central pivot. It gives you some simple probabilities, but sometimes you look around and you find a particular month or a particular week that's incredibly asymmetrical, like 1 month in the year, and I know which one it is. There's a particular month in the year that if you are a bull, you have a 70% likelihood of just being right just on any given coin flip. On imagine a coin and it was biased 70-30 rather than 50-50, and you just flipped that 1,000 times. Do you not think you'd probably end up making money in the end? So that's what I love about the particular indicator, the pivot probabilities indicator on TradingView I made specifically for Wayne's pivots. And that's one way you can incorporate quantitative analysis without, doing a whole lot of hardcore math. So long the service is provided to you, you can do a lot of these interpretations fairly easily. And the last one here is sentiment analysis. Now, I'll just preface this and say that there's a lot more kinds of analysis than just these four. But out of all the types of analysis that I've researched, these are your primary building blocks. The other niches kind of fit in between these, and you'll kind of find out that a lot of these types of analysis kind of overlap with each other. Like, for example, a sentiment analysis, you'll typically go and find a lot of surveys of businesses, like the ISM. Well, in ISM, the ISM numbers can be quantitatively used to forecast GDP. And then they can be understood fundamentally by just reading the trends on ISM data or reading the trends in the sub-indices of the ISM data. So there's a lot of ways to interpret literally the same data with just different interpretations, like, do people feel good or bad about this? Is this good or bad for my long-term outlook? Is this, technically overbought or oversold right now? Actually, ISM is technically a range-bound oscillator. If it goes really, really high, eventually it's going to come back down to 50, because that's just where the measurement mean regresses to. So there's a lot of interesting things that you can learn when it comes down to trading. But it also comes down to one thing is just learning to interpret the same data in different ways and learn how other people interpret different kinds of data and ratios of data and whatnot. And all of this is to help you generate a fundamental bias. And it could lead you to have a bias for a very, very long time in one particular direction, or through this research, give you the foresight to lean maybe bearish for the next month, right? Because, for example, September is a particularly bearish month. It's particularly risk off is a better word to put it. So keep that in mind, but also keep in mind that nothing is ever 100%, right? There's always going to be those few months, few weeks out of the year where you're just going to be wrong, and you have to be okay in trading with losing, because if you're one of those kinds of people who doesn't like losing, you won't be able to stay in this business for very long. And I'm not saying you don't have to like losing. I'm saying that if you can't stand losing, if you can't, because you will have losers, right? That's part of being an entrepreneur. You're going to have some failures along the way to your path to success. And it's about being consistent and honest with yourself about those failures. So then you repeat them as little as possible, right? So that's just an extra rant at the end here. I'd like to say thank you all for watching. If you guys would like to talk to me some more or find out, actually, I'll go ahead and discard those. I'll go ahead and give you a little sneak peek at something for staying along with me all the way to the end. I actually got this set up. And I've shown this in a prior stream before, but essentially what I'm doing is I'm codifying a lot of the things that I'm going over. And you'll see, if I zoom in here, and I scroll down, you'll see that there's a lot of different trading rules other than just bullish, bearish, and range bound. There's out of position, there's continuations, there's extensions, and therefore also cow trades. There's counter trend trades. Oh Lord, you really need to be careful of counter trend trades. There's compressed pivots. There's using multiple pivots on different resolutions, and I touched on those just a little bit here. And you can kind of see that I'm working on this pretty proactively. So if you guys would like to support this, go into the description and just pick up the indicator. Pick up the indicator, start using it, and I'll start doing some more of these streams covering a lot of the basic rules, so that then you are competent in just getting started with it. Because while the rules are out there, there's really no singular place you can go to just get really, really basic rules like that. It's like, oh, hey, there's a video online saying this is where you buy, this is where you exit, this is where your stop loss is, for some really basic stuff. Not even like advanced trading strategies, not just like advanced trading research, right? So I'll be going over some of the advanced stuff in this book, and I'll be turning those PowerPoint, slides into courses, covering into one course, including this book, covering all of this stuff with a lot of other stuff, including how to do that quantitative analysis, right, with the pivot probabilities, and how to do, seasonality and then risk management based off those probabilities, going over more stuff here. This is definitely not all the things I want to cover, though. So, if you want to work with me here, go ahead, hit me up. I'm just still in the process of working on this. It'll probably take a while to get this done. But, go ahead, buy the indicator, support this. Or if you're interested about that pivot probabilities indicator, I'll be doing streams later on kind of demonstrating some more uses for the pivot probabilities indicator. If you're already familiar with it, go ahead, ask me how to get access to it, and I'll go ahead and message you about that. All right. Wow. So thank you guys very, very much for watching. I'm very excited that we've had so many people watching actually over the last, well, you know, it says there's only been 6 people watching, but I can see the playback counter is actually a little bit higher than average. Usually it averages like 20-ish people. We're got like 30-ish right now. So it's actually nice growth. Thank you guys for hanging around here. And this will be the end of the stream. And I'll see you guys pretty damn soon.